recording. All right. So from our discussion on Bollinger Band, so you know that Bollinger Band you can use it to either measure trend. So when you are looking at trend, you're actually considering the midpoint of the Bollinger Band. By default, Bollinger Band comes with 20 simple moving average at the midpoint. So this is the 20 moving average. So most of the time it acts as trend. So anytime it's facing down like this, you see that it's going down. You say that the trend is down. When it's you see that it's almost flat here. When price started going down, you see that it's also started going down. So what it's doing ultimately is just to follow price. When price is going up, you will see that the average will also be going up. When price is coming down, the average will also be coming down. So there's really nothing much to look at there. Although you can check the setting based on what you actually want to achieve. Currently, I'm using monthly. So if I'm using 20 moving average, that's 20 period. That's 20 candles, 20 months is what I'm using as average. 20 months average is what I'm using. If I go to the weekly, for instance, so now what I'm seeing is 20 weeks average. So know all these things. But it depends on the time frame you are using that will determine what average you are actually tracking. And trend, as you know, trend can either be short-term trend, long-term trend, or medium-term trend. So if I'm using 20 now, for instance, and it's 20 weeks, you can say maybe 20 weeks average that I'm using here is medium-term trend. Let's say it's medium-term trend. But when I go to the monthly, that average that I'm seeing is, although it's still 20, but now it's 20 months. So you can now say that that average that I'm using here is a long-term trend, even though it is still 20. But consider when I'm now using it on daily, 20 days average. So 20 days average looks more like that's just 2 weeks. So that is a short-term trend. So that's how to use that midpoint, which is your moving average. Although you can change the setting. Let me show you how you can change the setting. This is currently using 20. You can decide to make it 50. It will give you another uh, view of the market. So if I use 50 now, 50 weeks or 50 months, you see on 50 months, what do you notice? You see that it's very, very clear now that when this was here, price was generally trading under here. Immediately price cross above this midpoint, which is my trend, what happens? Price started going up. So you can actually use 50, you can use 100. The only difference is that what you are tracking is now different. One will be short term, the other one can be long term, the other one can be medium term. So that is how to use that. And note one thing, that the midpoint, which is my trend, actually serves as support and resistance. So you can use it for trend, you can also use it for support and resistance. So in case you want to use it as support and resistance, this midpoint is going to be resistance when price is below. So anytime price is below, you see that it's acting as resistance. Immediately price is able to cross above it, what happened? It came and act as support. So this line, this midpoint, can either be a resistance or support, depends on where price is. If price is above it, it will act as support. When price is below it, it acts as resistance. But here, where you have here, this lower band is going to act as support, whereas this upper band will act as resistance. Let's now take it further. You can also use it to measure whether price is overbought or oversold. When price is trading below this lower band, we will say that it's oversold. Anytime price is outside of this band, it's oversold. Anytime price is outside of this band here, it's overbought. So let's look at it. Currently, what can you say about price now? Is it oversold or overbought? I'm waiting for your response. Is price overbought or oversold now? Anyone? Okay. Overbought, thank you. I'm just looking at my chart now. So overbought. That means currently it's overbought. It doesn't mean that it cannot continue to go higher. Because anything you are looking at on the chart is actually relative to that time frame. If I go to the weekly now, I can be seeing different things. You see that it's still overbought, but you see where price is now, that is in fact is inside, it's not outside. Or if you look at it very well, maybe it's slightly outside. But when I was looking at it on the monthly, you see that it was totally outside, that this thing is overpriced. I will still come to that so that you understand how to use overpriced, overbought, and oversold. If I go to the 3 months, what did I see also? Is still outside. If I go to the 6 months, in fact, it's not plotting here. Let's go to the daily and see what is happening. So on the daily, you can see that we see a different picture. On the daily, what did you notice? We noticed that there was a squeeze here. Bollinger Band squeeze. Remember what we said about Bollinger Band squeeze? Every time Bollinger Band squeeze is telling you that there is volatility around the corner. So immediately price is able to close outside, it might continue to go outside like that and stay there for some time. Now we have a squeeze now, and the price is already broken out of this squeeze. So what do we expect again? We expect follow through, that price will start going higher again on the daily. You now see that we are seeing different picture when we look at different time frames. So the signal you are seeing is actually relative to the time frame that you are observing. So it can be a long-term trend, can be a short-term signal. So if it's a short-term signal, you know that if you enter maybe in the next 1 month, maximum, you are out of that trade. Maximum, less than 1 month, you are out. If it's a short-term trend, it's a short-term trade. But if it's a medium-term trade, it can take you like 3 months, 6 months, maybe up till close to 1 year for medium-term trade. Then for your long-term trade, in fact, from long term trade, maybe like from 2 years and above, when you enter the market, you will stay there for that period, that long period. It can be 2 years, 3 years, 5 years. So now depends on the time frame you have and the parameters of the indicators you are using that will determine what you will, how you interpret the signal you are seeing. I hope the Bollinger Band is perfect now, no issue. Anytime you see that the Bollinger Band has already expanded, you see from here to here, it's only showing you volatility, that volatility is from this high and this low. But when it squeeze, it's telling you volatility is just from here to here. So the range is tight. It's tight. That's what it means. So when there is a breakout, what you will just observe is that you will just see that it will open up. And that's how Bollinger Band used to behave. So if you are going to come this low, I always recommend that you just switch it to Aiki-Nachi. So Aiki-Nachi will help you close out all those gaps. You know, when I was looking at the traditional candlestick, I'm just seeing gap, gap, gap. So if you want to close it up, just use Aiki-Nachi and it will help you filter out all those uh, gaps that you are seeing. So what else do we talk about in the Bollinger Band? I don't think there is any other thing. Okay, so let's now look at another indicator. Let's look at moving average. Moving average is also similar to Bollinger Band because moving average is just like the midpoint, only the midpoint. It doesn't have the upper band and the lower band. That's the difference between moving average. So let me remove the Bollinger Band and put moving average. So moving average has different MA. So moving average, okay, moving, okay, it has to be simple moving average. Let's use simple moving average. We also have different other types of moving averages. We have exponential moving average, we have weighted, we have smoothed, different ones. You can just play around with them, but for the purpose of this class, we are just going to do simple moving average. Simple moving average works fine, or you can also use exponential. But exponential works more on lower time frame. But when you are already on a higher time frame, I think that simple moving average works fine. They have their calculation. These things are just price. They are price that are connected together. So every time you are looking at, don't look at it and see line, be seeing price, because at this period, the average, the moving average is actually this price. And if you look at it here, at this corner, immediately I put it on this bar, that's on that bar. What did we see as the moving average? It's saying that price is 181 naira 90 kobo. So when price is above that average, it tells you that the market is bullish. When price is below the average, it's telling you that the market is bearish. That's how to also use the moving average. Then it now depends on the period you are using. By default, it comes with 9, but 9 is always uh is too short for me. I think from 20, there are some popular ones. There's what we call popular moving average that you will see that traders use often, like 10 period, 20, 50, 100, 150, 200. Those are popular ones. There's no need trying different ones. Just stick with those ones. Maybe 20 or 50. Let's say 50. So I'll tell you how you will now use it if you want to use it. Let's say, for instance, I'm using 50. You will now see how price is reacting to it. Let me show you on the monthly. You see what happened now? That here, it was resistance. Here is support. You know what it means in the future? Because it has acted as support before. Anytime this price, maybe price will stay here, or price will pull back, or anything will happen. As soon as this price and this price meets, most of the time it's most likely going to bounce because it's already acting as support. Let me change it and use 20. I want to use the one that will react to it more. I will see more signal. Okay, this is how to do it now. Okay, you see that it failed here. So most of this is how to use it. You need to see how price is reacting to it. So anytime you are using indicators, just know that every indicator reacts to different instruments differently. You can use 20 period here and it will work well, and use 50 period on another instrument. Maybe you now use 50 period on, let's say, Zenith Bank, and it will work perfectly. So you should know that the average that traders are expecting on that particular stock or company is actually 50 period. Some may be 20 period that you will see that is reacting to it in the past. If you look at this one, you see that market did not obey it. In Guinness, you see here he broke it, here he broke it again, here he broke it, here he broke it again. So it's really not reacting to it. It's not respecting it like the 50 period. So if I'm going to use any indicator and moving average here now, I will most likely be using 50, because from history I see that it reacts more to 50 period. That is for moving average. So moving average can give you trend, and can also act as support and resistance, and can also tell you that if price is overbought or oversold. So this is how you know if it is overbought. If it's overbought, that means market price is too far from its average. See the average here. I believe you can see it. The average is 102. That's 50 period average, 50-month average, and price is currently at 385. It's too far from here. So I can say that on this time frame, monthly, is overbought. It's too far. So we expect some correction. That is what we expect theoretically. But in real life, this price can keep going higher, and we will discuss how you will know that if it keep going higher. So far, you did not see any sell signal, and it's still going higher. You forget this one. This will always follow price. Whatever price does is what it does. So you can see that it can show you overbought. But when it was here, in fact, when it came close like this, we ask you whether it's overbought. It's almost like the average. Price is already trading at the average price. So it's a fair price to enter at this level because it's close to its average. When the market was down like this, it was close here, assuming it's a market that you can sell. This is an opportunity to sell because the average was going down. I hope it's clear now. So how you know if it's overbought or oversold If it's too far down from the average, it's overbought. It's oversold rather. If it's too far above from the average, it's overbought. If it's closer to it, that's where the price is fair. But how do you use it for trend? So when there is trend, trend is actually the direction of the average itself. If the average is increasing, from here you see that the average was reducing. It was reducing. When the average was plotting, it was reducing. But at this level, you see that almost like the average was flat. At this level, the average was almost the same. Then what happened here? The average has started increasing. Immediately the average starts increasing, is on the uptrend. Let me show you. Let me go to the lower time frame and see how it will react to it. Okay, you can see that it reacts well to 50, because when it was down here, you see it acts as a resistance here. It has a, now when it broke it, okay, it still broke it down, but here it has a support. It has a somehow like resistance here. See when it climbed here and it started going up. So you can make it a strategy that, okay, maybe when price, before you enter, you want to see that price is already trading above its 50 period moving average. So all these ones you will not buy, you only buy when it's here. And if you bought at 19 naira, let's say you even sold at one something from 19 naira, so it's fine. So when it closes below here, maybe you will leave it, or maybe when it crosses here, maybe you enter. I don't know. But here you see that it's very clear that it was staying above it 16 or 60, and before it started picking up. So this is how you can also use moving average. So this moving average, you can shift it, you can do all sort of things, but I don't think it's really very important. But if you want to really go into it, you can go into all the settings. Okay, which other one? What other thing? So let's talk about another strategy. Because of the challenge, you see that this moving average is has some whipsaw. There's what we call whipsaw. Let's say you want to make it a strategy that, okay, when price cross above it, you want to buy. You see that you have deceived you here, would have deceived you here, you have deceived you here, it's still going down, you have deceived you here. Then that will lead us to another strategy, which is the moving average crossover. Or before I go into moving average crossover, I believe I have explained how this average is being calculated. When you are using 50, that means it will average 50 period, 50 candles. You add them together and divide them by the number of period that you are using. Let's say you are using 50 now. You will add these candles from this one candle 0, 1, 2, 3 up to 50. Add all the average of the close. Remember, this thing uses close. Let me show you the settings. You see that the source is closed. I can decide to use high. I can decide to use open. Can decide to use low or use average. That's high plus low divide by 2. Can use high plus low plus close divide by 3. So different ones, but close is actually fine, and that is okay. So that is how this thing is calculated. Let's now go to moving average crossover. You now see how it will guide you against the whipsaw that we saw there, that at times it will cross, it will drop it, it will cross, it will drop it. Let's say HMA cross. So for HMA cross, what it does is that it uses two moving averages, and it's not a signal to say buy or sell. You only want to use it to track momentum in the market. You want to know which one is stronger. Is it the buyer's force that is stronger or the seller's force? So it uses two moving average. One is short period, then the other one is long period. By default, it comes with 9 and 20, 21. But you can play with different settings with different time frame to come up with any strategy that you want to use. Let's say for the sake of this class, I'm using 20 and 50, but make sure that they are somehow wide apart so that it can be clear at those crosses. At times I like using one that is long enough, then one that is short enough. So 20 and 50 is actually good. So this is what it does for you. So it filters all those minor whipsaw. You see when it crossed here, you see it didn't pick any signal, but here it picked signal, but immediately it dropped it. Here it picked signal, it dropped it here, and it picked signal here, it dropped it here. So what it's doing is actually, I want to hide. Okay, what I can do is to use line. I want to hide my, okay. So let me just, I want to just hide. I can hide it, but let me go to candle body. Okay. So I'll go back and change it later, just for us to see it clearly. You see here, what it does is when the slow moving period, slow moving average is above the, when the fast moving average is above the slow moving average, we say it's uptrend. So it's very good at for trend also. So it's uptrend there. Here it changes to downtrend. From here, we say it's downtrend. Here, when it's slightly crossed, we say uptrend, downtrend. So this will be a whipsaw. But if I change the time frame, the period, you see that it will clear this one. Okay. But if it's too long again, it will lag. So you have to just find a balance, because if you use a very long moving average, it will now lag the price action. Price will have started falling, it will still be showing you that it's going up. So it will not react to price fast. But if it's a short moving average, it will quickly react to current price. So you just have to look for a balance. So from here to here now, this downtrend, slight uptrend, slight downtrend. So you see that it's clear how it's giving you those signal. This clear uptrend, clear downtrend. In fact, price didn't really go down, but this is actually downtrend according to that strategy. From here to here now, we are now in an uptrend. So moving average crossover is also very, very good, because it's very clear, especially when you are starting, that you are not so used to how you can read your candlestick. You can actually use these ones also as a guide. Just by putting it on, you will know that whether the market is uptrend or downtrend. So currently we are actually in an uptrend. So how you now know whether the trend has momentum is the difference between the two moving average. When the two moving average are wide apart, let me use the ones that we can easily see. Let me change this to 10. So when I change it to 10, what did you notice? You see, okay, we now have more crosses. Let me change it to 10 and let's say 60. Okay, I think it's fine like this. Anytime you now see, you notice that the moving average, they are close together. One thing is telling you, when they are still close together, it shows you that the market is ranging. That means there is no momentum in the market. As soon as you see that the two moving average are wide apart, you see from here to here, you see that it's wide apart. When you compare it to here, you see that here they are close apart, but here they begin to separate and they are, in fact, quite wide apart. Now, this shows you momentum. It means that this uptrend still has enough momentum. When the momentum will subside is when the two of them will come close to each other. And the way you can use it for overbought and oversold also, if price is far away from the average, you can say that, oh, it's overbought. If it's far away upside, if it's far away downside, you say it's oversold. So that's how to use it for oversold and overbought. And for trend, just the cross, it will show you the trend. Then if it's ranging, then they will either be so close together, or you will see that it will cross up, cross down, cross up, cross down. Here you see that it crossed down, price did not really go down, it crossed back up. So from here to here is actually a range, because price did not really move. When it say down, it did not move. Let me show you again. I think by now I can put back the candles. You see that as soon as it crosses, price did not really go down until it crosses back. So it's telling you that from here to here is even a range. Price did not really decide the direction it wants to take following that strategy. That's moving average crossover. So which other one do we have that I think we should talk about again? Let's talk about another trend indicator, or another indicator that is also very useful, especially when you want to use indicator for confluence. So let's look at parabolic SAR. PSAR is also very good because PSAR also tells you trend and also tells you support and resistance. So for parabolic SAR, by default, it comes with is parabolic stop and reverse. That's what it means. What it's doing is anytime it's above price, is downtrend. Let me make it bigger. Anytime the dot is above price, we say it's downtrend. Anytime the dot is below price, it's uptrend. Anytime it's down. So you can now see how this place is just a whipsaw. It said up, then immediately it said down. So what the indicator does is that anytime price hits this dot, it will come down. When price hits it below, it goes up. So it acts as support and resistance because when it's above price, it's acting as resistance. When it's below price, it's acting as support. So there is support. Here it becomes resistance. Here it becomes support. Here it becomes resistance. Here now it has become support. From here, it has become support. And you see that it's still below market price. So as long as this dot is still below here, we say that this thing is still going up. That's what it means. It's this dot that will be hammering it and be pushing it up for the parabolic SAR. And you can also play with the setting. The setting that I like to use, most times I just change this one to 1. And this one also, I think I use 1. So by doing that, you see that I don't have too much of the whipsaw of showing here, showing that, showing there. So you can also use it also for your confirmation. And how do you know that it's overbought when it's too far from here? So if I want to buy now, I will not want to buy here because the dot is too far. Assuming when it comes so close now, I can say I will buy here. You see, if I have bought here, I would have been in this good trend. And if I have bought also here too, I'm still within. If I bought here, it's still within. But when it's too far from price, it's telling you that it's overbought. It's too far from its average. That's how to use parabolic SAR also. And it also serves as support and resistance, like I said. So what you will do if you want to use it for support and resistance, the first dot in the series is actually a support or resistance. So this first dot here now is a resistance. The first dot here is a support because it's below price. Just mark those first dots. The first dot here now is a resistance, another resistance. The first dot here is also a support. Another dot here, support. Another dot here, support. So how to look at it? When you are having lower support, you know that it's downtrend. This support is lower than this, sorry, lower resistance rather. Resistance here, resistance lower, resistance lower. But when you come here, remember your price sequence. This was the last resistance. Price almost get there, did not get there. But what did he do? He pulled back, but he did not take out this support. Now we now have a higher support. This support here is higher than this. So it's a sign that this stock wants to start going up. In fact, sometimes I use it for drawing my channels also. That's if you are just starting and you want to see something simple to follow. You can use it for your trend line. So what I'll do is the first line here, the first dot here, I'll connect it to the first dot here. That will form my trend line. Here the trend line was broken anyway, but what happened immediately? Remember the strategy of trend line. When the trend is still pushing lower, as long as it's pushing lower, you will go and look for the next dot. You see, this would have been a perfect downtrend. So when the trend is given way, as soon as it's given way like this, what I don't want to see, I don't want to see a lower low. Because anytime I see a lower low, I will need to now readjust my trend to accommodate the last swing. That's how to draw trend line. You can actually use it also to draw your trend line. That is parabolic SAR. Okay, I think let's just go to some oscillators, because all the ones that we've been talking about, they are actually indicators that go directly on your chart. So let's talk about indicators that goes on your oscillators or on your secondary window. Or before I even do that, I believe you still understand how Fibonacci is being calculated, because it's also part of indicators that goes on the chart. Fibonacci. All right. So what happened to my network? I think I'm thrown out. What happened to my network? Hey, Holy Spirit, help me. What happened to network today again? Don't start this. Okay, I think the network is back. Okay. All right. I believe we got that right. So let's move to another one that we can talk about. Talk about. Okay, let's talk about maybe some oscillators, because you will also need them. So for instance, let's talk about RSI, relative strength index. So what relative strength index does is just to measure the strength of the buyers and the sellers. So if it's above 50, if it's above 50, if that value is above 50, is only telling us that the average buyers are more than the average sellers. If it's below 50, the average sellers are more than the average buyers. And it's also very good to measure overbought and oversold. Very, very importantly, it measures overbought and oversold. So by default, it comes with, let me show you, 14 period. So you already know how that period is being calculated, and the source is close, it's applied to close, and is using simple moving average as a filter. This filter, you can add it, you may not add it, because some charting platform don't even have that average. So let's now go to, you can play with the setting, but 14 is fine, because by the time you start changing time frame, you'll be seeing different things. So I don't really advise even changing default setting. But if there is any need for you to change the default setting, what I normally advise is that just multiply it by 2 or divide it by 2. If it's 14, multiply it by 2, 28. Then multiply it by 2 again. So if you want to reduce it, 14, you can use 7. If you are not using 7, you are using 14. If you are not using 14, maybe 28, 28 or 56 or so. So I just work in that multiple so that I can give you a fair view. But by the time you start changing time frame, you will still be seeing different things. So you just be complicating things. So it's always better to just work with the default. So by default, that's 14. Then it now has some levels. So this level helps you to know whether it is overbought or oversold. So by default, it has 70-30. So if it is over 70, it means that its price is already overbought. If it's below 30, it means price is oversold. If it's 50, 50 is like the middle point where the buyer's force and the seller's force are almost the same. But by the time it's approaching 70, it means that the buyer's force is getting more. By the time it's over 70, it means that the buyers are really fully in control and is already overbought. It doesn't mean that you should sell. What it means that you might not want to buy at that level, but you can hold your buy. You can actually hold what you have. Okay. So what it means, you can hold your buy, but you may not necessarily start buying at that level. You can come up with different strategy as to how to use it. But let me explain what it's actually doing. Anytime it's oversold, it will show you this is oversold, this is overbought, this is overbought. You see that it's green. But here,
The question also West. I've read it.
so but when it's below 50, it means that sellers are now in control, but it's not overbought, it's not oversold. So as soon as it crosses here, it's oversold. As soon as it crosses here, it's overbought. Let's now see how you can make it a strategy. When you want to buy, in fact, as a trader, one, you are looking for a trending market. You can make money when market is trending. So the thing you are looking for a market that is trending. So as soon as you see that market is trending, you can now go and look for oversold in that trend. Already, this market is trending up. Very clear, it's trending up. But let's say you now want to buy. I will not say you should go and buy here because you're already overbought. Let's say you now come to lower time frame. You can buy the oversold in the lower time frame. Remember, when it came down here, you can buy here. That's a strategy. So you are just looking for oversold. So if you want to buy, you buy when it's oversold here. You see that At that level, it start going back up. Here also, you can buy. So you can make it a strategy that, okay, in a trending market, I'm looking for oversold. Already you have established a trend, let's say on the higher time frame or using moving average, anything, you have established a trend. The oversold is that when anytime it comes inside here, you see this is an opportunity to buy, this is another opportunity to buy, this is another opportunity to buy. So here is also another opportunity to buy. But what did you notice? Here, it looks more like it's still in a downtrend. So when it is in a downtrend, see, price will generally be going down. So even if you buy oversold, it's not going to be a strategy. In fact, if you want to use oscillator for strategy, one, when market is trending up, buy the oversold. But when the oversold is close to a support, that's when it's best. Oversold at a support, that's when to buy. Oversold at a support, buy. Oversold at a support, buy. Because it's trending up. Assuming it's a market that you can sell, like if you are trading another market where you can actually sell. Here in this market, we will only buy to make money. There's no short selling. Okay, you don't borrow stock to sell here. But when it's going down, what you are doing is you just sell the rally. Anytime it goes up and touches overbought, it's time to sell. When it touches overbought, it's time to sell. And the aim of the sell is that it should make lower low. As soon as it gets to overbought and it's not coming to make lower low, is a sign the sequence is changing. Remember, price sequence, it has to be doing like this or doing like this. As soon as it fails to make a lower low again and it wants to go back up, it has changed the sequence. So it's a time to either wait, whether market wants to range or market wants to change direction. That is what is most likely going to happen every time market changes sequence. So the sequence can be higher high, can be lower low. But as soon as you are now seeing a higher low, it did not touch the low, it now wants to start going back, you just need to be careful because at that level, it might start ranging or break here and change direction. That is how to use the oscillator. So for oscillator, it's very clear what you are looking for: overbought, oversold. When it's above the midpoint, it means that the buyers are still in control. When it's below the midpoint, sellers are now in control. But it depends on the trend. That's how you use it. Use it in combination with the trend. You can't use this one alone. It's the trend that will show us the bigger picture of what the market is doing. So currently, market is what? Overbought. But how do you know that this overbought is about to change? There is what we call market being relieved of overbought or oversold. So if you are going to use this thing as a strategy, let's say you bought now and you are holding it. When you will consider selling is when this market is relieved of overbought. That means it comes back into this 80 or 70 in this case. It has to come back. If it stays here, price can continue to go higher. Look at it when it crossed here now. You see throughout here, price went higher. Look at when it crossed here. What happened? Price went higher. So you can even make it a strategy that, okay, when it enters overbought, that's when you want to buy. And when it's relief, that's when you want to drop the buy. So that's another thing that this thing gives. So it gives overbought and oversold. You can also use it to know the buyer's force, whether buyers are in control or sellers are in control. That means if it's over 50, you can say buyers in control. Below 50, sellers in control. Let's now look at another thing that you can read from here. It's momentum. If it enters oversold and is staying there, that means it has momentum. This is momentum side. Seller's momentum. This is buyer's momentum. Anytime it stays here, it enters here and stay there. This market has momentum. Buyer's momentum. So if you just plot it and you see that this thing is here and it's staying there, you know it's different from the one that just touched it and went back. Touch it and went back. It's staying there. And when it's staying there, it even show you it's green by the way they configure the indicator. You just see that it's green. When it's showing red, it means that it's having momentum down. So you can see that this indicator, you can use it for several other things also, like momentum, overbought and oversold. But primarily they use it for overbought and oversold. All these other ones I'm saying is just for addition, because the indicator is just a tool. The way you use it will determine what you will get from it. I have many other indicators that I don't use it the traditional way that people interpret it. Like that parabolic SAR, there's a way I use it. I use it with what's it called? Fibonacci, and it works well for me. Also with Fibonacci. If time permits, I will still show us that also. But all these things, you might not use everything. Just focus on the one that you understand very well and make it a strategy. So that is for RSI. Another one that is very popular that I use is CCI, Commodity Channel Index. It also works like RSI, but in its own case, also works like RSI. Okay, I did not discuss the moving average, but let me explain what the moving average is doing. The moving average just help you to filter out. Also, it's also in RSI. This moving average just helps you to filter out. Notice that this thing is going up, coming down, going up, coming down. So if it's too noisy, what you can do is just to hide. You can hide the main CCI. Where is the main CCI? This is the main CCI. So hiding it, you see that it's now fairly okay, instead of seeing all those down, up, down, up. So when it's down here, it's oversold. When it's up here, it's overbought. So in the setting of CCI, it has the upper band. By default is 20, but it has upper band. The upper band, uh, is 100. The lower band is minus 100 by default. So when it's above, when the CCI value is more than 100, we say it's overbought. When the CCI value is below minus 100, we say it's oversold. And the midpoint is where maybe the strength of the buyer and the sellers, they are almost like the same. Okay, so let me show you, let me put back the CCI. See that the CCI value, this is the CCI value, is always jumping up and down, up and down. Let's look at it on the higher time frame and see. So even on the higher time frame, what we are seeing is now is that CCI is in the overbought region. I think it works well on the monthly. So overbought. So currently it's overbought. So on the thing that you will wait for, assuming I bought this now and I want to wait for it to I want to know when to sell. Before you can even consider to sell, or before you will think that this stock will come down, this CCI has to cross back inside. Has to cross back inside. Look at when it was here. As soon as it crosses up, we say, okay, we want to buy. As soon as it crosses back down, is a sell. As soon as it crosses up, is a buy. As soon as it crosses back down, is a sell. As soon as it crosses up, is a buy. You can see that it's very easy. But what it's doing is just following price. It's just following price. So don't think that because it's working here, you can put another instrument. Let's look at maybe Access, because that will work if the market is trending. Let's see a stock that is not trending. You see what is happening. See how the CCI is reading. Okay, but here you can still use it here. Immediately it enters here, cross up is a buy. You must wait for it to cross back up, because if you don't wait, it can stay here and continue to go down, and price will continue to go down. So you want to wait for it to be relieved, to cross back. As soon as it crosses back into this minus 100, you buy. As soon as it enters overbought, you should be ready. If it crosses back inside, it's a sell. So I hope this is also clear. Very, very clear. It's not difficult. Then the moving average, you can also make it a strategy because it gives you early entry. Instead of waiting and saying, okay, if it enters here, crosses back up, you can wait for it to cross above the moving average and use it as a strategy. So let's look at it. from here, you see that it's above it, you say you buy. Immediately it crosses below it, is a sell. It crosses above it here, is a buy. It crosses below it here, you will sell. You wait for it to cross above it, is a buy. Are you seeing it? So it crosses above it here, it's a buy, is a sell. Here also is a buy. And here it's not a sell yet. Why? It has not crossed the moving average. So as long as this thing is above this moving average, you can make it a strategy that, okay, you are still going to hold. You remember, it's also relative to the time frame. This is weekly time frame. These are just other ways that you can also look at the market if you are looking at indicators. So I only use indicator for confirmation. Assuming I was looking at swing point and I've marked my support and resistance, and at this support, I just noticed that the CCI just crossed above. That's double confirmation. Remember, if I was going to use this, I will say, okay, my most important bearish candle, let's say it was here. Okay, so as soon as it reaches here and it is not yet cross above, I might be waiting. Immediately cross above, I will buy. It will only help you to filter out some of the trade that may not work out, although sometimes it lags because it's actually indicator. It's taking reading from the real price, so it will lag the real action. So anytime you are just looking at it, just make sure that you are also looking at price, because you make money when price move, not when the indicators move. And whatever price do is what indicators will follow. So just be comparing it. Just look at it and look at price, and look at it, look at price. So that's how I would have used it. So this is CCI. It's also very good. I also use it, especially to trade other instruments. So let's look at another indicator that use momentum. Let's look at awesome oscillator. Also one indicator that I love to use. I love to use this indicator also. So in the awesome oscillator, what it does is, by default, let's look at the settings of the default. By default, okay, it doesn't have chart input, but by default I think it's 34. One is 34 and maybe the other one is 12 or so. The moving averages. It's also using two moving averages. When they cross each other, that's when this thing cross. So what you would do is, on this, we have the zero line. It has two parts. The zero line, which is the midpoint. Then these are histogram. We call it histogram. It represents the distance between two moving averages. Let's say one moving average is like this, the fast one, and the small one is like the slow one is like this. You see that this distance is becoming bigger, so this thing will be growing. As soon as this line is getting closer to each other, this thing will be coming down. When it crosses down, this thing will cross to the other side. So this indicator you are seeing is just a couple of two moving averages that are using for this histogram. The histogram is just the distance between the two moving averages. So know what the indicator is measuring. So let me change it to the way I like to see it. I like to see this one as green. It helps my eyes. So let's now look at how you can use it for strategy. Anytime it's below zero, you see that it's below zero here, I would say the momentum is down. Primarily, this indicator is used for measuring momentum. Remember what I said the other time, that when the two moving averages are far apart, that it means that trend has momentum. If it's going up, it has strength for pushing higher. But if it's down, it has strength for pushing lower. So when this moving average, or when this histogram is below zero, it means that the momentum is down. That means the fast one is below the slow one. So the momentum is down. But notice that it's down and it's green, but I'm coming there. Let's just define the two parts. When it's below, here, when it becomes above from here to here, you see that it's above. So you look at it with price. So it's not as if you just keep your eyes on this. As you are looking at it, you are looking at what price is doing. It's just giving you a guide of what price is doing. So as soon as it crosses up here now, momentum was up throughout here. So when it crosses down, momentum was down throughout here. When it crosses up, what happened? Momentum was up. When it crosses down, momentum down, momentum up, momentum up, momentum down. Now, what do you notice? The momentum just crossed up. So now the momentum is up on the weekly. So you can use this. If this momentum is strong enough, you will break this resistance. Is this resistance that is stopping price from going higher? Let's now look at another thing that we can see in this indicator. Notice that again, when it was up, sometimes it's green, sometimes it's red. When it's green, when it's up and it's green, it only tells you that the distance is growing, is becoming wider. When it is red, it shows you that there is convergence, just like moving average, convergence and divergence. That means it's getting closer. I will tell you the difference between this indicator and moving average later when see MACD when we are doing MACD. So when it's up and red, immediately you see red, it means that the candle that has this red doesn't have momentum. When you see up and green, that means the momentum is up and is strong. So the candle that has that histogram under it, the momentum is up and strong in that bar. That's what it means. So when it is now very high, far away from the midpoint, remember the midpoint, the zero line, you see that this thing is very far away. You can say it's overbought, but this indicator doesn't really have overbought level. As soon as it's too far from this zero line, we say it's overbought. So what did you see? It's now becoming red, 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 red. It's losing momentum. It's losing momentum. But the momentum is still up. Remember, it's still up. It's losing momentum, but it's up. So anyone that has red in it, this one, that means it doesn't have momentum. This candle doesn't have momentum. This candle doesn't have momentum. Here now, it started becoming green again. Green, green. So it started picking up momentum again, going up. When it got here, what did you see? You see that it started becoming red again. Red, becoming red, red, until the momentum switched to the negative side here. So from here, the momentum is down. But since then, you see that price did not really go down lower. So it started going back up. That's one way you can use it. You can use it for momentum. And these crosses also, you can use it for support and resistance. Let me show you how I use it for support and resistance. As soon as it crosses, sorry, I want to use vertical line. As soon as it crosses like this, you see that it crosses down here, it crosses up here, it crosses up here, it crosses down here, crosses down here, crosses up here. I just want to show you how you can use it for support and resistance also. It crosses up here. So what you do is, as soon as it crosses up, it has formed a support. The lowest price is going to be a support. As soon as it crosses down, you see that it crosses down here. The highest price between here and here is going to be a resistance. You see? So as it crosses back up here, the lowest price here is going to be support. As it crosses down again, what do we see? Resistance. You now see that we have a resistance here. Here now we have another support here. When it crosses back up here and it crosses down again, this is another resistance. Double top here, double bottom here. because when it crosses back up here now, you see that it's also a support. So you can also use that as support and resistance. There's resistance here, there's resistance here. So if you have bought around here now, ideally you will be targeting here. You see, it did not quite get there. As soon as it got close to this place again, if you buy, you sell here, you buy, you sell here, until you see a breakout. And when you are going to see a breakout, you will see that this momentum has to grow, has to go up like this, keep going higher. So as it is now, I don't expect any red. I just want it to keep going green, 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 green. If it keeps going green, 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 then price will continue to climb higher. I hope you understand that you can use it for support and resistance again. So that's another way you can use the indicator for momentum and for support and resistance. Which other one? Okay, let's now talk. So in the calculation of this indicator, why I like to use it for momentum, in his calculation for his average, he's actually
Hello,
using.
coach.
Hello, sir.
Hello, coach.
I'm with you.
Discover you have been using it on weekly time frame. Is that the
Yes.
best to
Okay.
use?
No, any time frame. You can actually use it in any time frame, but make sure that it's not giving you too many force noise. Look at it. If I put it on daily now, you see, I will see short resistance here, support. Although it will now be very close. You see, here a cross up, cross down, cross up. You don't want any cross up, cross down, cross up. It's too frequent. So if it's like that, then you have to go to higher time frame. So I can help you filter out too many crosses. I hope it's understood. So it depends on what you are seeing that will determine the time frame you will use it.
But I believe you prefer monthly time.
Yes, this we are just doing indicators. I'm just introducing you to indicators. I'm not talking about any. I'm not doing strategy now. I'm only explaining the indicators. You can use it on the monthly. You can use it on 3 months. Anyone. What I'm saying is, I'm only explaining the indicators. I'm not using it as a
But
strategy. Okay.
if I may ask, sir,
Okay.
which time frame is best for you?
For the uh,
Indicator.
for the indicator, any indicator that I'm using, if you want to use indicator, maybe from weekly below. You know, indicator used to lag. By the time you are looking at it on the monthly, you will be late to the market. If I was using this now on the on monthly, that means I have to wait until the month close before I can see any. Yes, so it's going to lag, and already the indicator is lagging already, and you are now using it on a lagging time frame. So indicators are actually you good on lower time frame, maybe daily. If in fact daily you can use it, you can use it on daily when you are using indicators. It will help you filter. You will get good entry. You will get good entry when you are using it on lower time frame. Okay. So as I was saying, the calculation for this indicator, it uses the body of the candles. And remember when what we talk about the body, that body represents momentum. So in his own calculation, he's actually using the body, the open and close for his calculation. Let's now go to MACD. What MACD uses is using the entire range, high and low. So if you plot awesome oscillator and MACD, their reading or their signals, they will be similar if the candles don't have much wick. If they are having small wick like this, you will notice that they will just look like is this thing the same? They will look so similar if the wick are not long. But when you enter a volatile market and you are seeing wick that is long, you will see that the reading of awesome oscillator will be different from the reading of MACD. So know the difference in case you want to use them. Just know when they apply. So MACD, MACD, So the same way, for this MACD, it has two moving averages. So one is fast, one is slow. The fast one is this 12, the slow one is 26. Then there is the signal line. So the oscillator is using EMA and the signal line is also using EMA. Those are just the setting. But look at what they're actually giving us. Anytime this MACD line, in fact, this histogram is only telling us whether the MACD or the signal line, sorry, is above the MACD. Note that the MACD itself is actually the distance difference between two moving averages. Remember, one is 26, the other one is, what is the second one? 12 EMAs. 12 EMA is the fast one, 24 EMA is the slow one. So it now depends on the period I'm looking at and the time frame I'm looking at. So when you now see that the fast one is above the slow one, what will happen is that this MACD will cross above zero line. Zero line is here. Zero line is here. It's a cross above zero line. Then when this slow one crosses below here, the MACD line will cross below it. See, this is where it crosses below. So this histogram that you are seeing is only showing you the difference between the signal line. Remember, the signal line also has its own period, 9 EMA. So the distance or the difference between the signal line and the MACD line is what is plotting here. Anytime the difference is negative, it will plot it under. Anytime the difference is positive, it will plot it above. Here is the difference is positive, but the MACD is down. So anytime MACD is down, forget this thing is weak. The trend, anything that you are seeing here is actually weak. Until MACD crosses above again, that's when it has momentum. MACD is a momentum indicator. Can help you track momentum. So you can make it a strategy that, okay, if I want to buy, I only buy when MACD crosses above zero line. So all these ones you wouldn't have bought. But by my own strategy, you would have seen entry here. The advantage is that you will enter early. But let's say at times when it fails, you see that you would have avoided this one when it fails. So immediately it crosses above zero line. This is when it crosses above zero line. Then this is where you now look for entry to buy. You see that it's late. Why I said indicators used to lag, and you need to just use them as confirmation, not as the main strategy that you are doing. Let me now look at it on the weekly. You see that on the weekly it has not even crossed above the signal line, but here see that it has crossed above the zero line rather, and you see that the market has enough strength to push as soon as it crosses above. It has enough strength to push. So when it's above and the signal line now crosses below the MACD line, showing you that the momentum is being lost. As soon as it crosses back up, you see that the momentum picked up again, but you see that it lags. I would have entered here, but this thing is telling me to enter here. So you can only use as confirmation. Let's say you enter a trade and you are now waiting for moving average or your indicator to confirm the trade. Signal candlestick will help you enter at good prices. Then this one can now confirm your trade. Let's say I enter a trade now and the MACD now cross again. That is double confirmation. Shows you that yes, the market is pushing higher. So for this now, can see
Coach,
it has not even crossed above. Okay, sir, I'm hearing you.
I don't even know my Zoom this thing. The
Oh,
icon that says where you raise up your hand so that I won't be interrupting you. I
okay, no
don't know.
problem. No problem. It's
I'm not
fine.
saying yeah. So from my research, research I'm doing,
Okay,
um I'm putting some liquid into WAPCO and Dan cement.
okay,
I have them for a long time, but I'm going to trade them this week.
okay,
So and my buy signal is I have my buy signal in many stocks, but
Okay.
can we use one of them
Oh yeah, no
to
problem. Let's
do
use
a
them as yes. That will be fine. Dangote Cement, right?
yeah, and Waco.
So for
Thank you.
Dangote Cement, we just look at it. What did we notice here now? MACD has already crossed above signal line and it's up. So it's telling you that this stock still has momentum for going up. That's what it's telling us. It's just to tell us the momentum. So if you now want to get your entry, you now need to do candlestick price action itself
Okay.
analysis. Why is this thing like this? I think it's strange. Or I've not seen it today. I thought I've seen this. Okay. Are you sure? Are you sure this is the chart of Dangote Cement?
You are using 3 months.
Yes.
You are using
Okay,
three
I'm using
months.
3 months. But even the
Yes.
monthly, the last time I looked at it, it was not like this. Okay. You know what I will do? Let me open another chart.
Okay.
What I'm seeing is strange. I've seen it today, so I was not expecting it to be like this. Sorry. No, those prices at times they are not Dangote. Thing looks strange anyway. Okay. Maybe I didn't notice it. But I thought I saw this chart today and I did not see this red candle. Okay. Maybe it's like that. So let me go back. So what we are seeing here now is that the momentum is still what? Is still up. This thing just help us with momentum. It's not telling us to whether buy or to sell.
Yes.
Okay, so it's just telling you the state of the market that okay, as this thing is going up, does it have momentum? So as it is now, it still has momentum. One, the MACD is above zero line. One signature, one sign. The other one is that the signal line is above the MACD line. See that it has crossed. So the momentum is intact. That's how to do it. Just to know the
So
momentum. Okay.
is the blue line is a Magden line. Why the
N-
red is a signal?
No, the
The
blue
Mag
line is the signal line.
yeah.
Then the MACD line is, let's go and check again, just to be sure. The MACD line is the blue line. The
Mm-hmm.
signal line is the
Is the red
yellow.
one.
Okay. So this is MACD line. Okay, this is the signal line. So what it
Okay.
means is that as soon as your MACD line crosses below the signal line, it shows you that, oh, this thing is losing momentum. But it
Yes.
is still up. As far as it's above, just note that this zero line is your major concern. If it's above it, it's up.
Okay.
But it might lose the momentum along the way. Look at it when it crosses above it here. So this momentum started from here. But if you were looking at this cross, you see, it's just a caution that, okay, maybe you can sell some and wait and see whether the momentum will pick up again. But notice that it picked up again here and went so high. Then the MACD line crossed below the signal line again. But now the momentum has picked up again. So you ride it. So you just ride the momentum. That's how it is. But you will not say you will just buy here. If I want to buy this now, I will be looking at buying. You already know how we buy. I want to buy maybe 50% of this, maybe around 700. That's where I will be targeting to
You
get
won't
it.
see it.
So we may not see it. But me, I prefer to buy like that to be on the safe side.
So this
Because
kind of trade now, you won't go for it.
I will not buy this. I will
Wow.
not buy. When it's outside, I will not buy. At most, let it come back inside. Maybe below 7 something. That's when
High,
I.
high, sell higher.
What you want to do
There's
now, you
there,
want to buy high and sell higher. That's
yeah, higher,
momentum
yeah,
trading. Me, I like
yes.
retracement trading. I like price pulling back to my entry. Then I will now enter.
Uh,
But if you
I
are
do that one if
considering
I
long
want to
term,
go. Yeah.
you can decide to buy. That's another
I
thing. You are
I
considering
do
long
that
term.
one if I want to go big, like sell buy from the bottom
Okay, okay, okay.
and
All right.
ride it up. But this one is just to pick 10, 20% and run away.
Okay. In that case, then that's fine. That's fine. That's fine. I
Because
hope you are.
I'm seeing this stock getting to 1K.
Of course, yes, now. But before it gets to 1K, it can pull back. Can pull back. But you need to also check the offer and the bid and decide whether we can get that price that I'm even talking about. So you can now start
That's the
compromising
sentiment
your.
that you taught us.
Yes, you can now consider whether, okay, let me buy some. If it comes down low, I buy more and stuff like that. That is
Another
MACD.
observation.
All right, sir.
Another observation, sir. There is volume. Oh. It
In
has
that
volume.
stock, yes, yes, there's volume.
Yes,
Yes, I can see it.
there's volume.
3.7 million
And over the average volume.
over the average, which is also good. It's also a good sign that yes, is people are interested in the
Are you
stock.
seeing that one from the chart now?
Yes, this side, this left side.
It's from
Okay,
the chart.
I didn't start with you guys anyway. So
Okay, so here is where you see the volume. That's volume for that day. This is volume for Friday over 30 days average. 30 days average is 2.445 million. So that is moving average. Then let me see, can I take one more? There are many indicators. In fact, if you go online, you will see indicators is like 10,000 more than
how about VREPs or FMA?
FME.
Coach, talk about volume indicators. Oh.
Okay, we will talk about this meeting is almost ending. So I want to, when it starts, then we talk about how to use volume also. In fact,
Okay, sir.
volume is, I won't say volume is an indicator self. It's just like price too.
Exactly.
So it's not taking, it's reading from any other underlining variable. So he has his own mind of his own. Volume is volume. I hope you get what I'm saying. Unlike here, this one is
And
calculating price.
and
So
coach,
price is the major thing. All right. All right, I'm with you. You were trying to ask question.
yeah, for me, I think when you are checking price action
Okay.
and there is no much volume to defend the price,
Mm,
it's not a good place to look at.
of
For
course.
me, the way I always look at this is if a price of a stock is moving, probably move from 70 to 80 naira.
Mm,
But around that 75 naira, there was
mm,
a lot of volume there.
okay.
Then the stock now retraced from 80 naira back to 50 naira.
Okay.
What me I will do is I will enter that trade and
Okay.
target 75 naira where I knew that the
There
volume was
was
much
large volume.
and the
Okay.
boost will defend it.
Yes.
Does it make sense?
Yes, it makes sense. There is one indicator here. Okay, when we get to volume, but before we go to
Okay.
volume, let me just finish this one. I've done
Okay.
RSI, I've done MACD, done also oscillator. Uh, any
I'm using
other
RSI.
oscillator that is very popular? Stochastic is also very popular, but stochastic I don't use it. It has a lot of noise. If you are going to use stochastic, then you need to start refining. It has a lot of noise. Let me bring it out so that you can see. It has too many lines, and too many overbought, oversold. So
About DMI, sir.
I'm coming. I want to deal with this one before going to volume. Stochastic. So you see stochastic also. It also measures overbought and oversold. So when it has its own range also. Its range should be between, okay, this is a percentage K, a percentage K smoothed. All these ones, they are just by default settings. You can change it if you want, but by default, I think it's fine. Then the upper band is 80. So when it's above 80, you say it's overbought. When it's below 20, you say it's oversold. So midpoint is actually 50. Just the same way you use RSI. But in this case, it has too many down, up, down, up, down. It reacts to price very fast. Uh, Unlike RSI, RSI is still a bit cool and not too volatile or not too reactive to price. So that's why I prefer RSI. The reason we are using indicator is for it to filter out what we are seeing on the chart. So if the indicator itself is noisy, then it is a problem. I want something that will not be too noisy, that will filter out the bad, or let's say the potential wrong trade that I may enter by looking at chart, by looking at price itself. So if their indicator now is now too noisy, it's also giving buy sell, then it will become a problem. But it's also a popular indicator. You will see it, especially online trading. We see people mention stochastic, RSI, CCI is not even very popular like that, but I like it. I use it. Then MACD and all that. So let's stop with that. Let's now go to support and resistance indicators. One example that we can use, we have many, but one that I use very often is the pivot point. It has its own calculation, but don't let's uh, don't let's bother with the calculation. Parabolic star. Let me remove parabolic star. Okay. Okay. So this is my pivot point. So what pivot point does is depends on the period you are using. If you are using daily, you have daily pivot, you have monthly pivot, quarterly pivot, 1 year pivot, 3 years pivot, 2 years pivot. It depends on the one you want to use. But the way it works is this: if you are using daily pivot now, every new day you will see new levels, because it takes its calculation from the last day and use it to plot the current day. So if you are using weekly pivot now, every new week you see new levels to enter. So you can actually decide to make it also your entry strategy. In fact, it's very good for entry. The midpoint is just the center line. So I like to paint it another color. White is fine for me because I can easily see it. White. Traditional is fine, but some people, Fibonacci, Woody, Classic, Camarali, and all that, you can try them, but I use traditional. Traditional is very popular and it's fine for me. It has its own calculation. You can go to the calculation if you want, but I don't think it's necessary since the charting platform already provide you with the levels. So what you can just change here is, one, do I want to look at it on the weekly basis? So if we say weekly, what it does is every new week it gives you new levels based on last week. So if I go to the weekly now, no, let me come to daily so that I can see it very well. 1 week is just 5 days. So every 5 days now, you see, it plots new level. It plots new level. Now last week was just this range from here. You see that it's very close. It's very, in fact, it's too close together. Okay. So next week like this, as soon as we enter tomorrow, you will see another pivot drawn based on last week pivot. So that's how it works. But weekly is actually too close. So we will use another level like uh, let's say monthly. So monthly, every new month, new levels will be formed. You can just use those levels as your entry. Like now, if I want to enter this stock now, maybe I will be targeting monthly pivot. See, monthly pivot price is around 745, which you say is most likely you will not even get. So if you buy here, you see those levels, those are resistance. Anytime, because this level acts like support and resistance. When price is here, this is going to act as support. This is going as resistance. This level is going to act as support. And as a trader, you want to buy as close as possible to support and sell as close as possible to resistance. So you now decide if it's in the middle, so it's like 50-50. When it comes close to your support, you can buy, then you target to sell at resistance. That is for the weekly. So every new week you see new one. Let's now go to quarterly. Quarterly means that every quarter you see new pivot. These pivots have been plotted since January. And by the end of March, another pivot point will form, which will now, what it will now do is to give us new levels that we can use to trade based on this quarter. So if you want to enter there now, you see when the quarter started, this was the pivot, this was price. You have traded this one, maybe you will be targeting to sell somewhere here, and you will have made some money since January. So by the time another quarter forms, that one will also have its own center pivot. So you will now use that level as prices that you can use to enter. So that's for weekly. Let me go to, that's for quarterly rather. Let me now go to yearly. So this yearly now, what it does is it plots this level, and this level stays there throughout the year until next year before you see new levels. So when I'm looking at it, the way you see it is these are support, this is support, this is resistance, this is resistance. Right now, price is between this R2 and R1. So because price is above R1, it's going to use R1 as support. So ideally, if I want to buy this stock now, I want to buy as close as possible to this R1, which is the support. Although it can break it, and if it breaks it, it will go to the next level or find support around here and go back up. So if it breaks it now, you want to be targeting here. But as long as it's still staying here, you assume that okay, this thing still have momentum, then it's not likely that it's going to break it. So you use this thing in combination. If the trend is up, momentum is up, most likely it will not break support. So you want to buy at support. If the trend is up, momentum is up, most likely it's going to break resistance, because in an uptrend, resistance will be broken. In the downtrend, support will be broken. So when the trend is up, you're actually buying support. So this stock you'll be actually targeting here to buy on of using the monthly, yearly pivot point. And if you buy here, knowing that it's uptrend, you can assume that it's going to break here and target here, target 1,000. Just like my brother said, that is this stock is getting to 1,000. 1,000 is actually at R3. But the way I trade it, I also look at the previous years, especially when I see pivots here. I will target this first, because as it's going like this, it's also going to use this as resistance as it's going up. Price will react to this 963. If it's able to break it, that's when it goes there. If it breaks it, it goes here, it goes there. So those are levels. So let's talk about any other level that you can talk about. I think it's fine with this. Only pivot is fine. Use it with your trend line and your support and resistance that you draw manually, your zone, and you will be fine. So let's remove. So this pivot, usually I just use 3. You can use 3, you can use any, but when it's too many, I don't really need that much levels to watch. So with 3 like this, I'm just fine. So 3 years, 1, 2, 3 years, pivot levels. So that is how you would have used it. So let's talk about volume. So the way you use volume is also one interesting thing. It's like price. It doesn't have, it doesn't take its reading from any other thing. Just like price. Price is price. Whatever price does is what it does. So it's like when we say market has a mind of its own. So if it's going up, it's going up. Every other indicators we have to follow. So volume is also like that. When the volume is going up, it's going up. every other indicators will follow. So let's talk about volume. To bring out your volume, just go here, type volume. Volume is not seen as an indicator. So when you are using volume, you can use two other indicators with it. So I already have volume here. So you just set, I'll just turn it on. So this is volume. So the way we use volume has two bars. One is green, one is red. Anytime you see a green one, it means that the candle went up that day. That means the market was bullish. Anytime you see red, it means that it is on a bearish candle. So all these ones that are red, that means the candles are red. The ones that are green, the candles are green. That is one thing that you need to know about the volume. And volume, the way you can know the value, just stay on it and look at the reading here. When I stay here, what did I see as the volume? 79.19 million. That is the volume for this month. Remember, I'm looking at monthly. So if I go to daily, weekly, any candle you stay on again, that shows you volume. You see? What's the volume of that? That's 127 million units. It's just the unit that was traded in that bar. And because it's green, then it's green. Fine. Then if you go to, that means it's weekly. If I go to daily, the same way. So these are daily volume. And this daily is what you see here. You see that it said volume is what? 3.78 million. So this day will be 3.78 million. You see it? Look at here, you see? And the bar was red. The bar was red. 3.7 million. That is what you are seeing here. Let me now show you how you can now use it with average. You know, we said volume signifies momentum. So you want to measure the current volume with its average volume. By default, this thing comes with 20. This thing will come with 20 average. But I've changed it to 30 because on this charting platform, what I have here is 30. This one is not, this is the way it comes with the chart. You can't change this one. This is the way they present it. Because it's 30, if I'm seeing this one 20, so it's conflicting. So I prefer to change this one also to 30. So in your own case also, you might want to change it to 30. Just change this volume to the average to 30. So what you are doing is to look at the average volume relative to the current volume. When the volume is above the average volume, that is good momentum. See from here, anyone that is above average volume is good momentum. So what you will do is to look at price action on that day. Here, look at this one, this volume spike. So whatever happened here in this bar was actually huge and is buying volume because it went up. Market went up. Here, you see that it's also high volume, but it's red. It's a seller's volume. That's why it's up like this and it's red. So what it means in short is that there was distribution of this stock at this price. So we are seeing distribution here. That's why we saw high volume when price go down. When price is going up on high volume, it signifies upward momentum. When price is coming down on high volume, it signifies downward momentum. I hope it's clear. So this white line is the average, that 30 days average or 30 period average, because it's day. That's why it's day. If I put it on weekly, then this is 30 weeks average. I hope you get it. So this is 30 weeks average. It's high volume and the market came down in that period. It's more than average. I hope you are getting it. So what my brother was saying about when you want to know at what price the volume is clustered, there's a volume indicator, but I've used it before, but it's not available on the free plan. But now I don't have the premium indicator again. But let me bring it out and see if it will work here. We call it volume profile. Volume profile. There are a lot of volume indicator anyway. You
That's
can
it.
play with them.
Yeah. VLUP.
Where is it again?
Just type VLVP.
Okay, VR. This one, visible range.
Yes.
Okay,
Yeah.
let me see. Volume profile. Okay, let me remove one indicator and see whether it will work.
It won't
I
work
it won't
because
work,
you are
Abi.
using free.
Okay, because I know I was
I
not able
was
to use
I
it
was
then.
thinking, why are you using free, coach?
Shame me. I don't really need all those indicators. That's why, sincerely, I don't
Okay.
use them. I don't need
Okay.
them. uh, I've played for the premium before, so I tried all those indicators. I see that it will just complicate things for me.
Shina Baba.
If you are used to your chart, you know every trader understand his chart. If I
Mm.
do the way I analyze markets, if another trader is seeing, he might not understand it. But what I'm seeing, you might not see it
Mm.
unless I explain to you. So by the time you
Mm.
also start your own strategy, you will put on your chart. It's like driving. You have already set your seat and your mirror, everything. So you don't need
Okay.
any other extra anything. So it can't work. So what the volume profile does is it shows volume across. So it's showing volume at price. You know that this is showing volume at time. On this day, this volume was traded. Oh, okay, in this week rather, this volume was traded. But in the volume profile, is horizontal. The volume is like this at price. It will tell you that at 800, this is the volume. At 720, this is volume. At 7 something, this is volume. So it will now do like this. And it acts like support and resistance also. Anywhere you see volume cluster, if you see that one volume is longer, that means that price, there was accumulation at that price. It will come and
Mm.
act as support. And when let's say we saw huge volume at this level now. So if you buy here, you should sell here because already we have a lot of people that bought here
Good.
that will
Yes.
supply it when it gets there. So volume profile is
Yes.
actually good for doing that. It has volume across the bar. So it's volume at price. At 750, the volume can be like this. At 794, the volume can be small. So you now use it as support and resistance. There are other. Okay, Mr. Sliman, I can see your hand. There are other
Yeah,
volume indicators that we will look at also. Okay,
yeah, I have some a question around this volume now.
okay,
Like now, I see that other one you want to check is not available on Basic.
okay.
Basically, what I'm trying to look at is, on the generic one, we only see one volume. Is
Yes.
there a way where we can see? Because at times when you are placing your order on those offer on those
Read.
platform,
Hmm.
you just see some volume. At times, I used to get confused. Are these guys institutional or are they? You see, everybody is bidding 80 naira.
Hmm.
They will just stay at 70 or 69 naira. They
Okay.
will not change that bid.
Hmm.
And believe you me, at times, for some reason, maybe is in overbought,
Hmm.
it will get to them maybe one way or the other, and you will not be wondering.
Hmm.
And it's not small volume those guys are putting there. At times, you see them, they will put 1 million unit,
Hmm.
and they will put one ridiculous price that
Price that you thought.
nobody is even bidding for it.
Hmm.
But believe you me, at times, you just be surprised. One day you just see sudden surge that they got it at that same price.
Hmm.
And
So
there's no way we can see that on this volume profile because this one just average out everything for us for the whole day
you will
for
see
total
it on
volume.
volume profile. What you are saying, you will
Okay.
see it only when the order is filled. The volume you are seeing on the order book or price book,
Yes.
remember that they
Yeah.
are not filled yet.
I know.
So
Yes.
you won't see them here. It's only orders
Correct.
that are filled that you will see here.
That you see here.
All those ones that you are seeing in the order book is actually the liquidity or the volume that is waiting to be filled. So it's not tracked here.
Okay, and like we said now, let's say total volume for this day now is
Mm.
3 million.
Yeah.
You'll be shocked that when the price drops, some people will buy a lot of volume at
At some
maybe
price.
in
Yes, his
between
volume
one
is
particular price.
yes, his volume profile that can bring that out. But there
That
are
out for you.
other volume indicators also that I use. I've used it
Okay.
before, but it's also act as support and resistance. Volume something I've forgotten because I've removed it. Volume I can't remember. But that one also shows us clusters of volume on the chart. Let me see if I can. It's been long I used
Because at
it.
times, you know why it's very funny?
Hmm.
At times, that's why I think that those guys, maybe institutional or PFA, you
Hmm.
just see for that particular day, that price they maybe they even have a volume they want to supply. They will crash that price. Then
Hmm.
everybody is now selling at that price. The following day or 2 days after, you just see it, boom.
Yeah.
I
Yeah.
think what you're saying is in-house transaction.
No,
Is
he's
it
not
in-house?
in-house. He's not.
At times it's not because you
No.
see it
If
on
it's
the
in-house, there are some deals. You know, it's not every deal that is on the order book. There are
yes,
some
some they don't bring. At the
negotiated
end of the day,
deal
you
that is
just see
not
that
that is
they
not
cross
even
one
showing.
deal that is not
Yes,
in
it will not
the
show. It will not
book.
even show.
Yeah.
So it's
I
So I'm
different.
know
talking
This
about
one you are saying, I know, is
I
yeah,
know
you will
what
different.
see
he's
them.
saying.
Hmm.
I know
Okay.
what he's saying.
Okay.
See, let me give you an example.
All right.
On the bid offer,
Hmm.
you are trying to buy 18 naira. The highest bid is 18 naira.
Yes,
On the sell offer is 83 naira.
correct.
And you see some people, they
They
will
will
be
go down.
bidding for 75.
Correct.
And you are in
80,
80 naira trying to buy from the seller.
83. Correct.
And later you just see that the 75 naira will just be filled up. So you'll be wondering, how come, what happened? It's because one seller puts his order
Hmm.
at 75 to match up immediately with the lower one under you.
So you will clear all the one
It
that
will
is there
just
You
clear
first.
it.
you will clear. Yes,
So
you will clear all the
if
ones
if
up.
you are very fortunate, in fact, there is something I was watching one video about 2 days ago. I want to try it when market open. Let
Okay.
me tell you so that you can try it. Anytime you are seeing a big transaction on the bid offer, the market just drop. You understand? And you
Yes.
see that offer is going, or probably at the seller. Maybe the one seller just crash it, and you want to go back and try to change your, you
You will
put
not
an
get it.
higher price.
Hmm.
Now you want to change it to match up what that person is selling.
Bid. Yes.
Just right click on that offer
Yes.
and
I
just click
used
buy.
eh,
Okay.
oh
It will match up what that person is selling.
Okay.
You don't get what I'm saying?
I get it.
yes, yes.
We need to
Maybe
try it. Hmm.
Please,
you are
please
watching it
explain
now.
again.
You are watching it now. Someone at the seller side, the highest person there, the top person is selling 85.
Okay.
Correct.
And someone at the bid side, the highest person wants to buy 80 naira.
80.
And you are trying to watch what is happening. You want to buy 75. Do
Okay.
you get?
Yes.
You want to buy 75. So you'll be at the down side of it.
Bottom. Correct.
Yeah. But you are not putting bid. You are just trying to watch the dynamics and see the best price you are going to put. Now, later on, at the seller side of it, you just see that 85 will just disappear. You just see someone selling at 75 or 80. So, for you to quickly put your order to match up what that person is selling, you have to go to sell, buy,
Yeah, that.
and put
Yeah,
all
yeah.
this. Just right click what that person is selling. Since the price is at a discount, just
Yeah.
right click it and say buy. The person
Okay.
was, I don't know whether is a platform something, but I will try it
Maybe
on
it's
No, I
Atlas.
platform.
think I think it's working because I tried that on
You tried,
one of
okay.
the platform on Atlas
Okay.
this week and it
Atlas.
worked.
The
It
person
actually
told me
worked.
is Atlas. I will
You
try
know
it
why
on
it
Monday.
worked? There
Okay.
was one stock I've been tracing, like Union Home Read, for a while now. I want to buy at a particular price.
What
So
price?
everybody
What
is
price?
everybody is putting like 80. So
Yeah.
that money, because of time difference, I just woke up early, come to my system, I sat down,
Okay.
that today I want to see what will happen.
Okay.
So I saw the highest price for that day was 80 something, even though
Yeah.
the price is selling 676 according to a book. There's no
Yes.
100,000 to take it.
Yes. Yes.
Okay.
So when I saw 83, I said, okay, maybe today I want to do something. I saw one person just below. The person put 68.8 F.5, and he want like 80,000 units.
Mm.
I said, this person will never get this deal now. How can?
Okay. Okay.
Because me, I'm not in a hurry too. I
Yeah.
just went there. I put one offer first at 69. For like 1 hour, nothing happened.
Mm-hmm.
Suddenly, my brother, somebody just come from nowhere. Just bring a 68.8 offer.
Yes.
He cleared all that guy bid. Luckily,
Yes.
because I was the next to that guy, he cleared all my own too. More than 10,000 units.
That's
Wow.
what I'm saying.
So
You know why? You know why?
ah,
They've talked to each other. That's why I said he's in house.
if I had known, I would
Me,
have put like 30 or 40,000
how will
too.
you know?
I don't know. Even me, I was just saying, okay, I want to be as close to this guy that even if it's 1 month, I want to see what will happen to this guy.
Mm.
My brother, we didn't twinkle on a van. By the time that offer went through, I said, let me quickly buy another
Add
one. My brother is
lie
gone.
lie.
No, it will go. They will have cleared
Gone.
the offer. See,
So that's why
Yeah.
I say at times, this guy, I think they manipulate, or maybe they are
see,
talking to each
no,
other.
no. This is not
No, I mean, maybe they are talking to each other that I want to
That's what
sell
I'm
now.
saying. Me
You know.
and you now.
Okay.
Me and you
Okay.
now.
Okay. You know what?
Me and you now. Coach is telling us that, see, I have this stock. I bought it at 20 naira. I want to sell it at a discount. Okay, you guys are my students. By the time I will tell you when I put the offer, just right click it and buy. That's what they do.
Wow.
So instead of coach selling it at a normal price, you
So
just
people,
tell us that, oh, I want to do it at a discount. Oh. So I'll put this offer. Oh yeah, just right click it is there. So they just click it and buy sharp sharp.
yeah,
Before
because I
you,
have Mary Trade, it doesn't work like that. But on Atlas, my brother, it worked.
me, I will try it tomorrow.
Yes.
All right.
So
So
that's why I'm asking whether there's a place where someone can see where all
no,
these
no, no,
guys they
no,
are. No, it's not
no,
there. Yeah, I
no.
know.
You know, the thing is with the brokers, there are some things that they are seeing that you are not seeing
Yes,
on online. Yes.
yes,
One,
yes,
when they see order, they see the house that is initiating the order.
yes.
They know themselves now.
They see the name. They see the
Yes.
name.
We are not
Especially if you
seeing
have
it.
Bloomberg terminal.
So there are a lot of things that they are seeing that will help in their own decision making that we are not seeing. And they used to discuss among themselves also. So
Yes, yes.
a lot is happening there. A lot is happening there. So let me just, this is another, this works like the volume profile. This thing, this is how the volume profile looks like. It's just helping you gauge every price, the volume that was traded in that price. You understand? So that's how the volume profile works. But I'm not sure how accurate this one will be because the volume profile that I know is a paid version that comes with
Okay.
this. Okay, so you can play with different volume. Just know that volume helps you to know one, whether the stock is attracting buyers. You want to see that volume is actually increasing because when there is no volume, it's volume that will drive price. If there's no volume, price will not move. So you need to pay attention to the volume also. And what again? What again? Which other indicator am I leaving out? So by next week,
Question, coach.
all right, sir.
Just to confirm that, okay, if a price is coming down on
Okay.
low volume, yeah, that shows that I should be ready to buy because that means the price is likely to turn. Just to
Yes.
confirm that.
Yes.
Okay.
If the volume is reducing, price is coming down and volume is reducing,
volume.
it shows that people are not willing to sell. That's
Yeah.
one
Okay.
sign. Then another sign is, let's say volume is increasing and price is not increasing. It used to happen too, that it will just look as if price is ranging. That's how to know institutional buying. Institutional buyers, they don't buy on increased prices. They have their target price that they accumulate. It's actually a range. You just notice that
Mm.
there is volume, but price is not moving. You know, normally price is supposed to be moving, but when price is not moving, it shows you something. When price is moving, that means there are different people that are placing those orders. Do you understand?
Okay.
But if it's only one person that is placing that order, he knows how to be buying it such that they buy it little by little, such that they
So that the price will go
accumulate
up.
it, but the price will not go up. Do you understand? The price will not
Yeah.
go up. So anytime you just see that this stock, like Harade now, you notice that the price is just like a staple there. But if you go and look at the volume that is entering that stock, it's not
Serious
small.
volume.
So it's showing you that they are buying at the same price. They are buying at the same price. Transaction is going
Coach,
on the same price.
And until they are done with their buying, they don't want the price to
Yes.
go
When
above
they
that.
are now done with their buying, you will now see it is the retail traders that will now start pushing the price
Suffer.
up, because they are the one that just buy any price. Any price they will just buy and they will be pushing the price up. So that's what used to happen.
coach,
That's how
coach,
to
I
just
want to
read the
share. I
volume.
want to share my screen. Can I?
Okay, okay. Let me.
Yeah. For on that volume discussion.
Okay.
Can you see my screen?
Not yet. It's not yet. I've allowed it, but I can't see it.
Yes, sir. Yes, sir. That's all.
No problem. Then if he's not seeing it,
It's not sharing. Okay.
can you see now?
It's sharing now. It said, all right, I can see it now.
Okay, this is my tracking way of like this under banking sector.
All right.
If you come here, this is 1 year transaction.
Okay.
So that's Zenith for you. Zenith 1 year, GTCO 1 year. Then for the last 3 months, all
Okay.
these ones are in billions. You can see
Yeah.
they're in billions. Now I've been able to track using the volume over 1 year and 3 months. So
Okay.
if you come here, you realize that Zenith Bank for the last 1 year is the second
Okay.
in the value,
Okay.
but under 3 months is the first.
First. Okay.
So these are I do it, and that was why I said okay, I need to learn TA just to
Yes.
understand it, because sometimes this one gives me a lot of work and formulas and all that.
Okay.
So from this one now, I can tell you that um, FCMB
Okay.
for the last 1 year takes 10 position.
Okay.
But if you check 3 months, it has moved to the fourth position.
Okay.
So you can see how it moved from 10
Yes.
position
To
in
fourth.
banking sector to fourth. So
Mm.
that shows that something is happening in that
FCMB.
stock.
Mm-hmm.
You understand? So even if the price is ranging,
Mm.
me, I won't be concerned. What I'll just be doing is over time, I will know what they are doing.
Yeah.
Do you get what I'm saying? So you can see FCMB here, and these are all the metrics, earning per share
Okay.
price,
Okay. Okay.
blah blah blah. So you can see from here now is 118 billion,
Mm.
but just for 3 months, it's moved to 42,
Mm.
while other ones that are higher than it in a year start falling down. far increasing. So I know that something is happening here. So what I want to do is I will subscribe for that paid this thing for what's his name?
Trading View.
Trading View, so that I can
Oh, okay.
access. Yeah.
Yeah. Yeah, you can do it. You can do it. In fact, I don't know whether they are still doing discounts. If you are coming for the first time, they should give you discount.
They did Black Friday.
Even maybe Black Friday but
I,
they
I
should give
think
you
I saw
discount
one
since you are
for
paying
this
for the first
Easter
time.
too. I think I saw one for Easter, maybe 70%
They can
discount.
give you something.
70, okay.
So you can just
Because
buy it and try it. If
I'm
you,
using what is investing.com, but that one doesn't come with complex chart except to switch it. But it's not always
I
okay.
don't even really like their chat platform. I still prefer
Just
Trading
very
View.
pedestrian, yeah.
I still prefer Trading View. So I think
I've
we've
shared it
we've been
too.
able to. Yes, I've seen it. I've seen it. We've been able to cover all the major indicators that you just need to know. In fact, this one I just did them so that when you say you are doing technical analysis and they are saying RSI and you are saying what is RSI, they will like, who taught you? So that's why we did all these ones. There are other indicators also. Go through the document that I shared. You will see different other indicators that you can just play with. Just play with them, see how they react to price. But what I've found out is that all of them, they follow price. Any indicator is following price. So whatever price does is what they will do. The only advantage they have is just to help you filter out, okay, prices. They help you to filter out price. So that is where we are going to stop tonight. So from next week, or this week Friday, then we'll now start doing proper analysis that, okay, if I want to analyze a stock, these are the steps that I take. This is how I measure my support resistance and all that. And we'll be good to go. Then we'll now go to trading psychology and also money management for us, because as trader, we must understand trading psychology and also money management. But if you have been trading before, maybe it's already part of you. But for people that are coming in newly, they should understand what it means to manage risk, because everything boils down to risk management. Why I like retracement trading, because it gives me it reduces the risk on the
Yes.
trade as to buying on momentum. If I buy on momentum, although it looks like, oh, it's going up, but sometimes if you now come back, you will now be in a serious drawdown, minus 20%, minus 30%, that you don't
You'll be
want to
holding
see.
the bag.
You will not want that. So that is it. All right, good night, everyone. Wish you all a very lovely week. Thank you.
Thank you.
Thank you, coach.
Recording as usual, sir.
Yes, I'll share it immediately. Nice, sir.
And don't forget the screen now that you promised us.
Screener, can't remember.
Yes, out on Trading View, how to screen.
That was
We are coming there when we start
Friday.
doing trading. Yes.